Mahesh, you've heard perspectives coming in from all these countries. Which one do you think is the most active on the deal street? Which of the countries really is getting maximum traction when it comes to M&A?
I think they are all very varying situation. Maybe if you had asked me 2 years back, Japan India was most active. In the last 2 years, we did 6 M&A between Japan and India, which over late have slowed down, not because the need is not there. The most natural buyers and this had come in different sectors. Now they're taking some time and they will come back again. So it's just a matter of time, the investments. When I say USA, until 2008 they were very aggressive in India. Then after Lehman Brothers and the global issues, they're holding back. We did other way around. Indian company we advised to acquire business in USA, which was happening very successfully. Now we are seeing a traction back again from US mid-market companies, buyout fund who are not entered, and other companies to come to India again and again.
Which sectors are we seeing most more traction?
You can say financial sector, you can say healthcare, you can say chemical sector, which is absolute new sector in the traction, lots of polymer technologies and business services. Now all around you see these are largely consumption driven or a strong B2B process with sector where lots of transactions we are seeing. And we started saying that there is no one sector, there is no one country where you can see it happen only. You have to pre-sale. So once we start hitting every time, meet promoters, meet CEOs and sell a concept and say it's still growing, at some point time they come back again. So I think it's the time when USA is coming back again and we see lots of potential. Like Germany, we said, I don't think there's a country like Germany has so much of technology research and similar culture where family owned. You can find 3rd generation, 4th generation, 6th generation. We have quite a few German clients which are 5th or 6th generation, 152 years old and still holding on. Even Bosch Post, that is the world's oldest and the largest family owned company.
So India is the 3rd largest FDI provider for the UK. But is it going to be the other way around as well?
I think the opportunity is there for the UK. I think it will be different. I mean, the history has been maybe in aerospace, in automotive, in the engineering sort of side of life. I think the opportunity is for the more service side. The UK is a service-based economy now, largely, and therefore it looks at its own market, and there's not a lot of growth there. You know, a lot of the large businesses have grown in the UK as much as they can. Europe is maybe more of a risk to sort of grow into those markets. The US is fine, but it's a different market, and there's plenty of UK businesses have lost their money going to the US. So I do think India is an opportunity. It's there's definitely a growing market and a big opportunity, and there's lots of embryonic service-based businesses in India where the local market has shown an appetite, but perhaps they don't have the business model or the infrastructure or the knowledge or the IP to actually scale that business up. And I think that's where we might see some larger UK businesses coming in, business services, facilities management type operations. So I think there is inbound opportunities, but as Mahesh said, I also think there's considerable outbound opportunities for some of the larger Indian corporates who are looking for technology, looking to bring home some of that proprietary knowledge and apply it themselves in this market.
You're talking about European acquisitions, but I'm not too sure with the equity market, especially of the listed companies. They will be very keen on the companies going to Europe for acquisitions. That's really not considered that great because a lot of countries have gone belly up. There is financial crisis across Europe, barring of course Germany.
I think if you look to China, they're looking at it in a very different way, as I said.
A very long-term view.
Yeah, and they're not acquiring the businesses for Europe itself. They're acquiring the businesses to get with the right technology into the global supply chain of huge OEMs. And this is interesting.
Yes,
So
I agree with
I think you need a bit of a different perspective on that, and there's a huge opportunity. I think.
Course.
Yeah.
I take that
Yeah.
point. I take that point, and that can provide a platform for a global play for most of the countries, while it's available cheap because the overall economy is not doing well. So there can be value buying at lower levels. I agree to that point. Sean, you have a lot to say about which sectors in which, apart from infrastructure, that there can be M&A between India and Japan.
Yes. Let me talk because I am learning quite a lot from Shinyi because they are supporting us and providing a lot of the teasers and so on. And what I'm learning is from a lot of the Indian companies, Japanese companies looks most ideal in terms of the technology and in terms of the funding.
Yes, so despite Ranbaxy Daiichi, we have still seen many M&A.
Yes.
We have some steel companies also very interested who are making their way into India once again. So that's happening. So apart from this, are there other food processing, warehousing, and which are the new areas that are developing as a trade route and M&A between the two countries?
Japanese restaurant chain or food companies looking for, but they cannot get just the precise opportunities that they are waiting for. And some of the materials ones are just trying to come in. And another just big sectors now coming more and more would be the e-commerce. IT already over here.
Yes.
I'm not talking about NTT or so on, the so-called e-commerce. That's also now booming in Japan. It's a new sector.
Yes.
That's just another area.
So many sectors in which we are seeing traction, just not in a few of them.